Now these days there's a lot of smart money traders, not retail. They do now. Most people do not use retail concepts. Okay, they use smart money. Well, now
Yes.
that's what they do. Now even in Jet, they make their own names. They'll call it a FUVIC or something. They'll call it a full-bodied candle. They tell all
Yes.
of these like rebranded names, but the real thing is this is just an order block because ICT who was the one to come up with all of this. Okay, so this is just an order block.
Yes.
Okay, and then now imagine how many people would have looked at this that way. We have trend line liquidity, and then okay, now smart money traders would view this as a good point of interest, right?
Yes.
They
I
have
also would
every
have viewed
reason.
it as a good point of interest.
Yeah. So then ask yourself if it was that clear, and if the
Yes.
market makers do not want us to make money, would they give it
Yes.
to you that easily? Would they do
No.
that? No, right?
Definitely
So
no.
now,
Yeah.
definitely no. So now imagine how much of liquidity would be resting below this low.
Yes.
Okay, imagine how much of liquidity is now resting below this low. Now, even the smart money traders have been trapped here. Okay, the
Yes.
reason is, yeah, the reason is this. They'll do this. The new people to smart money, they'll do this because that's just the 30 people stop loss. They'll think, okay, that's fine. And then now even the breakout traders have been trapped here, right? Now they'll view this as a strong low. I gave you the reasons why. Okay,
Yes.
I gave you the reasons why. And then now what's missing? The real inducement. Okay, an inducement means now. Okay, now this is trend line liquidity. That's right.
Yes.
But if people bought here or here or here or here, now would they place their stop loss below this? Is there any reason for them to do it? Like,
No.
no, that
Yeah.
does not make sense. So now how can this act as liquidity? Even this even this was a trend line at that point. Now how can
Yes.
it be liquidity? Now the people who bought here would have taken their profits, right?
Yes.
After this break of stocks, they would have taken their profits. So we need to have a real inducement. By an inducement, I mean a trap where even the smart money traders, the breakout traders, the position traders, the swing traders, the hedge funds, all of them have to get trapped. Okay, all of them. Now
Yes.
you see how much of liquidity is lying below this low. Ask yourself, how many people would have viewed this as a good order block, and how many
Yes.
people would have looked at this as a strong low. Okay, it's not only you and me that's trading. There's like millions of people that's trading, and
Yes.
nowadays because of this the COVID thing, many people are into trading, right?
Yes. Yes.
So now, so now people would now imagine how much of liquidity is resting below this low. How much of liquidity? Okay, and then now like once a new trading range has been created, okay, we need to identify where the real trap is. Where is the real inducement? By inducement, I do not mean all of this trend line liquidity or equal lows or anything. The real inducement, the real trap, a trap where even the smart money traders would get trapped. Okay,
Okay.
and then now we have that, and we have this order block right here. Like now, what's special about this order block is that now liquidity has been fed into this POI. All of
Yes.
this liquidity has been fed into this POI. I hope it's clear.
Yes.
Okay, but now,
Yes.
okay. So does it make sense so far?
Yes.
Yeah.
It makes
Now,
sense, but like then again, I'm getting confused in structure then.
yeah, structure plays a major role.
Yeah,
Structure and
because
liquidity.
here we broke the structure here, right?
Well, yeah,
Yeah, but then so then it will be considered as a strong low. Then if we break this, then it will be a break of structure, right?
that is the inducement.
Yeah, that
That
is the
is the inducement.
inducement. Yes, I can
Yeah, see,
understand
you're
this,
you're getting
but
trapped now.
yeah,
You need to know market structure very well because
yes, that is the
on
problem.
on the daily time frame, like I told you,
Yeah.
this was the real price swing from this low to this high. I told you
Yes.
anything in between would be
Yes.
intermediate
I'm not able to hear you if you're speaking something.
Hello. Can you hear me?
Yes, now I can hear you.
There was some problem with my connection. I'm sorry for that.
Yeah, no problem.
Okay. So now you see, even you get trapped here. You'll view this
Yes,
as a strong low. But
yes,
I told you, this is a real price swing from this low to this high. And
yes,
everything in between is internal range liquidity,
yes,
right? Now you
yes,
see, now you see, even you got induced into doing something wrong.
yes.
You
Yeah,
see
but
that?
I
Now,
don't think I would have taken a trade here. Like, because
yeah,
for me, we were in a downtrend in the 4 hour.
yeah.
So, yeah.
We
But
we
I
need
would
we
have,
need confirmation.
yeah.
I
We,
I
but
wouldn't even look at this. I wouldn't even look at this order block because I know for sure this will be taken out. I know that because
yeah,
there was no inducement. Inducement is the main thing. Okay,
yes,
because now there's a lot of smart money traders. So now look at the charts. Now go back to your charts in the years 2004, 5 or something, and then look at the market. There's just one order block. Price comes back to that, and then it goes. That's it. Now,
yeah,
since there's a lot of smart money traders, they will create more and more traps. Okay, a trap
yes,
where even the smart money traders would get trapped. Okay.
yes, yeah,
Now, what's special about this order block right here is the liquidity that's resting above it. Okay. Now, you see
yes,
the stop losses and the sell stops and even the stop losses of the smart money traders, everything have been fed into this, right?
yes,
Because now after the manipulation, where will price come into? Boom, right here, right? Okay. But
yes,
now there's something else we need to consider. Okay, there's something else because after now, once you're going to choose an order block, always choose the order block that is closest to the inducement. Okay, that's closest to the inducement. Okay,
okay, yeah,
okay. And now, like I told you, people would place their sell stops below this, right? They'll do that.
yes, yes,
And then once price comes back down like this, okay, the
yes,
people now if it keeps going lower, the people who place sell stop right here, they would be in profit. Okay, and now if
yes,
they're trading on the 4 hour time frame, so obviously they have a lot of money to risk, right?
yes,
So now look at this thing. So you need to look at all of these tiny details. Okay, now it may seem like a big thing, but once you start doing it, you can, like, once you look at the market, you'll see that. Okay, now see, if they place their sales stop below this, you see, that's 33 pips until here.
yes,
Okay, now
yes,
if the sales stop get activated right here, and if it goes
yes,
back down to 33 pips, now, and since, like I told you, they'll have a lot of money to risk. Okay, so
yes,
now imagine they used a 10 standard lot size right here. So once it goes back down to 33 pips, that's like a $33,000 profit. You
yes,
get that? So now,
yes.
would the market makers let us make money? No,
No,
right? No,
definitely, yes,
definitely no. So now,
yes,
will it come back down this far? No, right? No,
no,
they will
yes,
not. They will not. So I told you, always choose the POI that is closest to the inducement. Now, what do we have right here? You see this wick? You see this wick? What did I tell you about the wick? The first one would be on the opening of the wick. Okay, mitigated.
yes,
Mitigated. What's left? What is left? 50%.
50%, yes,
50%. You see how price came back down right here? You see how it came back down the 50%. So we would not, honestly, obviously, we will not take a buy from the 50%. We know because a huge manipulation is coming now because this is a liquidity pool. This is a pool of liquidity.
yes,
Okay, we know that. Like I gave you all the reasons why we
yes,
do not trust this low. You see that? And then you see, took out all of the, now it activated the sell stops, took out the stop losses of all of the smart money traders or anyone. And then now even the breakout traders have been trapped, the position traders, the swing traders, everyone is now manipulated. Everyone has been taken out now. Okay.
Yes.
Now, would they take price back down lower? No. If they do that, these people would be in profit. So now they need to go back higher. Okay.
Yes.
Okay. Okay. So now, but where will they go into? Where will they go into? Now, on the weekly, this was our range, right? From this low to this high. Okay.
Yes.
That was
Yes.
our range. But on the 4 hour, this is what we could see. Price went higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and then a break of structure. A break of structure right here. You see that? We had a break of structure.
Yes.
Okay.
Yeah.
And then price broke the structure. And then now
So
we
I
yeah,
have
what's
a
it?
doubt. So if you
Okay.
consider VIX as a wick break as a break of structure, then here also it broke this structure, right?
Yeah, it broke
In the
structure. It broke
4 hour.
structure. It broke structure right here. Okay. But you see,
Yes.
external range liquidity has not been taken out yet.
Yes.
You see, I told you. Now, did this week go higher than this? Higher than
No.
this previous high? No, right? So
No.
then it comes back down, and then you see, even that's an inducement. That's an inducement. Now you would take this as a good POI, right? Because why? It took
Uh,
out liquidity and then it broke it even broke structure right here. You would
yes.
view this, yeah. That is the reason why we must always go with the higher time frame flow. Because if you do not know where the higher time frame is heading, or the intentions of the higher time frame, you're gonna fail. You're gonna fail big time. You see that? Price took out liquidity from this high. Okay, it took out liquidity from this high. And it even
Yes.
broke structure. Now, how many people would view this order block? You see, it even gave a reaction. Gave a reaction.
Yes.
Okay. And then how many people would look to re-enter right here? Now
Yeah.
see, they're just creating liquidity and then they'll just take them out. That's what they do all day, every day. Okay, they'll create liquidity and then take that out. They'll induce and then they'll take them out. They'll induce and then they'll take it out. That's what they do all day. Okay, and this thing, the inducement thing, it even happens on the 1 minute, and not only on the 1 minute. It even happens on a 15-second time frame. Okay, now
Okay.
you see, but even to use the 15-second time frame, you need to know where the higher time frame is heading. Okay,
Okay. Okay.
now you see that. Now you see that price went higher, but what was our real target? This, right? The external range liquidity. So
Yes.
now, even
But
though this, yeah, what's
but
it?
still, if we are marking the current structure, we
Okay,
will mark
yeah,
it as like this, right? Like this, and
I can see your annotations.
you cannot see my annotation.
No, okay, now it's clear. Yeah,
Yeah.
that's how we would mark it. But
So
I
like,
told you, I
yeah,
told you.
you told me
Where
about
where
the
did the real price swing came into the market? Where is the real price swing? Okay, zoom out a little bit and then see and then look at it. Where are the real price swings? Okay, price went like this: higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. You see it? Zoom it
yeah.
out a little bit and then see where the real momentum came into the market. You see, these lows, like, once you look at it, you know. Once you look at it, um, that's those lows are not trustable.
Yeah.
And then, okay, now price broke structure right here. Okay, it
Okay.
broke structure right here, and then broke structure, went back higher, and then came back down, broke this structure once again. Okay, and
Okay.
then price went higher, came back down lower. Okay, now
Yes.
what is our range on the 4 hour? From this high right here to
Yeah.
this low, down here.
Yes.
Okay. Okay.
Okay.
Awesome. I hope you understand what I told you so far.
Yes. Like I have some problems with the inducement, but maybe if we see some examples, I will
Yeah,
get it.
I'll show you
Yeah.
the examples. I'll show you the examples, then you'll understand.
Yeah.
And that's why I told you, you need to know market structure very well.
Yeah.
Okay, or else it's very hard. Okay. Now, we know that price has to pull back after this low has been taken out. We know that, right?
Yes.
You know, price has to, what do we call? Price has to pull back after this low has been taken out.
Yes.
Okay. And then I told you, why does price come back inside of a range? To take out internal range liquidity.
Yes.
Okay. And I
Yes.
told you, even imbalances and order blocks will act as internal range liquidity. Okay. And right
Okay.
here, and right here, they still have their positions unmitigated, right? Because that's
Yes.
why we have a huge imbalance right here. Okay. And then, like I told you, this was a real POI, 50% of the week. Okay.
Yes.
Okay. And then price went higher. Now we know that after this low has been taken out, we need to pull back. Okay. We need to
Yes.
pull back.
Because there is a lot of liquidity sitting below it.
Yeah, there's a lot of
Yeah.
liquidity sitting below it. Now we need to pull
Yes.
back, because if price
Yes.
continues going down lower, the people who place sell stops below this would be in
Will be in
profit.
profit. Yeah.
Yeah. And now, where will the pullback go into? Okay. Now, this was
Into the
our
premium
range.
of this
From
4 hour
this
level.
high, yeah, awesome. From this high to this low
Yes.
was our range. Okay. Now,
Yes.
people would have looked at this, right? People would
Yeah.
have looked at this.
And they will
Why didn't
keep.
it come there? Why didn't it come there? Why?
Yeah.
Why? The reason was, this is what we call a climax reversal. Okay, a climax reversal. Have you heard of it before?
No. Never.
No. Okay. Okay. What a climax reversal is it takes out liquidity. Okay, a climax reversal usually happens due to news. Okay, it takes out liquidity,
Mhm.
and then it will drop down heavily. Okay, by heavily I mean, now look at this. Look at
Yeah.
how many pips this imbalance is. Look at that. That was a 80 pip imbalance. Okay.
Yes.
Now that
Yeah.
is a climax reversal. You see that? Price took out liquidity from all of these highs, and then boom, it came back down heavily. It tanked back down. See, it was just melting. You see that?
Yes.
Now
Yes.
that is a climax reversal. And now, why wouldn't price go up here? Now I'm sure now, once price was starting to pull back right here, people were looking at this and only this. Because why? There was a huge imbalance. People were looking at this. I think
Yes.
you can relate.
Yes. Yes.
Okay.
No, I was not looking at looking to trade here. Like I
Okay.
also followed the premium and discount concept.
This
So I knew
okay.
that as soon as we came into premium, I
Into
started looking
premium,
for sales. Yeah.
that's good. That's good. Okay, because if we do this, anything above this would be a premium price. And then now, do you know the reason why price did not come back here? Why didn't it come back and fill this imbalance? Okay.
No.
The reason is, where is the inducement? Where is the inducement? Okay. There needs
Yes.
to be liquidity, because
But
liquidity is what drives the market. Yeah, what do you
can't
say?
this order block act as an inducement because a lot of
That will
uh,
act as inducement. Okay. Yes, that will act as inducement. But
yeah, but
I'll tell you.
yeah,
I'll
I
tell you.
understood what
Okay.
because the range is very big, so the people who
Yeah.
place their trades here
See,
will be
now
in
you know
profit.
it.
Yeah, I
Awesome.
understood.
Okay. Now, there is no liquidity, because now liquidity is what drives the market. You know that, right?
Yes.
Now, if there's now, imagine price did this thing right here. It came back down, and imagine price did this,
Yeah.
and then it went back down. Now we have a reason for higher
Yes.
prices. Okay,
Yes.
because we have a lot of liquidity resting above these highs. Now price
Yes.
would come into this, and then it might come. Now you see, there is no inducement.
Yes. Yeah,
Okay.
like the thing which you told me now, like the pip difference. This thing is very important. No one tells this.
Yeah, no one tells you that. That's the thing.
Yeah.
And the climax reversals and